One felicitations to you as you join us on today's episode of Tax Matters. My name is Olumoyiwa Matuluko. How was your long Easter break? Yes, that remains the longest holiday in the calendar with a guarantee of Friday and Monday. And people seize that opportunity to touch base with their kith and kin in their homesteads. Did you go to the village? We hope you had a restful time and that you enjoyed yourself. It's a new month, the beginning of the second quarter, April 2012. So much has happened in the taxation subsector in recent weeks, and at such frenetic speed that one begins to wonder where to begin to report, to keep you abreast of happenings. First was the Tax Treaty Strategy Workshop, which was held from Monday the 19th to Tuesday the 20th of March in Abuja, which had in attendance the Federal Minister of Finance and the Coordinating Minister for the Economy, and the person of Dr. Mrs. Okonjo-Iweala, who very soon, by God's special grace, will be the president of the World Bank. It also had in attendance participants from all over the world, and the intention is to develop capacity in the negotiation and signing of tax treaty, double taxation agreements. The following week, the National Assembly had public hearings on the new National Driver's License and the new vehicle number plates being introduced by the Federal Road Safety Commission. The Federal House of Representatives held its own public hearing on Monday the 26th and Tuesday the 27th, while the Senate used Tuesday the 27th and Wednesday the 28th of March. And from Thursday the 29th to Friday the 30th, the Federal Inland Revenue Service held the Central Enlarged Management Meeting, the 2012 Corporate Plan and Enlarged Management Meeting, also in Abuja. The theme was sustaining the transformation agenda through taxation, their own way of keying in to the transformation agenda of President Goodluck Jonathan. Enter April, and activities resumed in earnest on Tuesday, April 3, with the Joint Tax Board holding an emergency meeting on the Taxpayer Identification Number (TIN) scheme. Registrations were made for chairman of the State Board of Internal Revenue, the chairman of the Joint Tax Board, who is also the executive chairman of the FRS, and the following day, Wednesday, April 4, a presentation was made to governors at the meeting of the Nigeria's Governors Forum, at which some of the governors and the National Security Advisor, Lieutenant General Uweyi Azazi, retired, were registered for taxpayer identification number. Of course, you know by now that all that culminated in the registration of Mr. President, the Vice President, and more governors at the meeting of the National Economic Council on Thursday, April 5. Also, on that occasion at the Aso Rock Villa, the President launched the national tax policy. Rewind a bit to Tuesday, April 3, and a bombshell was dropped to that gathering of chairman of State Boards of Internal Revenue and other members of the Joint Tax Board.
This will be my last Joint Tax Board meeting, and to say thank you very much to everyone, to all the chairmen. Thank you very much.
Yes, Tuesday, April 3. That was the first time that earth-shaking announcement was made public, and Tax Matters was there. Mrs. Ifeko Omogi Okaru, member of the Order of Niger, member of the Federal Republic, Chairman, Joint Tax Board, Executive Chairman, Federal Inland Revenue Service since April 2004, has moved on. And a new person is now in the saddle. There will be time to talk about the tenure of Mrs. Okaru on this program and at other fora. But for now, we want to bid her goodbye. And Alhaji Kabiru Mashi, the acting chairman, will say, welcome on board. We will bring you full reports on all the activities and events that we read out at the beginning of the episode of this episode. But today, what we want to share with you is an interview that we conducted with Mrs. Ifeko Omogi Okaru way back on Monday, February 27, on the sidelines of the special meeting that the Joint Tax Board held to announce the commencement of the implementation of the Personal Income Tax Amendment Act 2011. That interview was intended at that time as the first in a series of interviews to be conducted with top management of the Federal Revenue Service to review the activities of the service and its achievements over the years. That interview remains as relevant today, where Mrs. Okaro has moved on, as it was on that day that it was conducted in February. It is still spot on. Good afternoon, madam.
Good afternoon.
The reform started year 2002, 1 decade down the line. How has the reform impacted on the Nigerian tax system?
Okay, well, first of all, let's look at the tax system as akin to building a house. And a house that you want to last for centuries. A house that will keep all your monuments. You know, that kind of house. And you want it to be designed in a manner that come rain, come shine, those monuments will be intact. What we did in 2002, 2003, 2004, we're doing the environmental studies, the soil testing, to check what kind of house. What we've done 2004, 2007 is to do the bill of quantities for the kind of house that has been designed. What we did from 2007 to 2011 was to award the contract to say this is the kind of house let's start to build. What we're doing from 2012 moving forward is building. But we are still on the ground level. So the point I'm trying to make is that there's a lot of work that we need to do. But because we want to build an enduring tax system, we've taken our time to do the testing, to do the research, the environmental studies, to be sure of what house, to award the contract to the right person, so that way the legal framework and the contract is so that there will be no variation, undue variation, and to ensure that at the end of the day the house will be completed. We've started the building process. Could say it's a 20-story house and we're still on the base level. So that tells you the amount of work that we still need to do. But I believe we're on track. Definitely something has changed. Not that I say so, but the unsolicited comments that we get tells us that people appreciate the awareness. People appreciate that maybe before they could get away with not paying taxes, now more of the offices are reaching out to them. People appreciate the figures, the revenue collection figures that have increased. People appreciate the improved working environment. People appreciate that our staff look good because they are better paid. I remember somebody telling me he was going for an audit in a company, and somebody called him aside and said, "Are you with FRS?" He says, "Why are you asking?" He said that you look different. And, so this must be you must be one of those who have benefited, from the process, and he smiled, I also see it when we do retirement parties, and you have old staff who come to say thank you God knows how many times because of the fact that we've provided for even the former staff and will continue to provide for the existing staff. I see it in the ongoing projects, the fact that we've not stopped. We realize that the process of building is a continuous one. You achieve a milestone today, you bring up another one tomorrow. We got CIT, Companies Income Tax Amendments, in 2007. We're revising the Income Tax Code completely now. When we started, we're not looking at transfer pricing. We're looking at transfer pricing regulations now. In 2005, we created a large taxpayer unit. March 1st, we'll be announcing not just large taxpayers, we now have medium taxpayers, we now have small and micro, we now have individual and enterprise. Focusing more on the taxpayer to ensure that we are reaching closer to the taxpayer, understanding the taxpayer's needs, and organizing our systems around different market segments. 5 years ago, we were implementing Project FACT. Now we're implementing the full integrated tax administration system. When we started in 2004, you could ask me for collection figures, or I ask you to give me collection figures. Today I get a figure, tomorrow I get another, the next day I get another. Now I can go to my system, check the web portal, and I can tell you how much we've collected by yesterday. So yes, there have been changes. There's no doubt about it. But I think, like I tell people, even if you get a first class, it's history. Every day is a new day. And what we need to do is to put in focus where we're going. And we want to keep in focus the fact that we want a modern tax authority, not just at the federal level, at all the state levels. We want to be connected to each other. We want to have an intelligent database that will enable us to assess better, reduce human interface, so that way it's a more automated system. It tells you that there's still a lot of work to do, but we've started.
Let's talk about the taxpayer identification number. What is the role of TIN in all of this?
TIN is the beginning. You can't have automation, effective automation, without TIN. TIN is a single identifier that allows you to track, analyze, sort, filter, all around that number, any profile you want about that person, any information you want about that person. TIN is what makes it. And in a proper TIN system, Muyiwa Matuloko has one TIN. And so if he pays dividends and taxes are withdrawn, and that number is shown on his stockbroker's account, ultimately, if we're linked to that stockbroker's account, we can see the profile of Muyiwa at a glance. So it's key to registration. The TIN, it doesn't in itself register you, but it helps the registration process, so that way I can link your profile to your number. And once I've registered, you're in my system, I can now on a yearly basis start saying, hello, Muyiwa, how you doing?
You can get now my purchase of a Jeep.
Exactly.
And ask for your own.
And say,
Okay. So that should help with the taxation of the affluent.
Not just the affluent, everybody. And you see, from a tax point of view, we don't see affluent, we just see taxpayers. And because you know why? The person you think is poor may be the person that has the most income. And the person that has the most income, you will find that by the time you address all the expenses and so on, is not even supposed to pay tax. So if you start segregating at the point of assessment, whether somebody is affluent or not, you may miss the boat. I think we just approach every taxpayer with, understanding the risk profile of that taxpayer, and then we take it further, and then whatever.
The Federal Inland Revenue Service introduces the tax card to make all tax payment easy for you. Just follow these 7 easy steps. Obtain your taxpayer identification number, TIN, for free at any FIRS office. Get your tax card from your bank. Log on to www.firsonline.com. Then register to obtain a password and access the payment process pages. Fill your TIN number, tax type you're paying, amount payable, and period of payment. Confirm the entries on your transaction. Then print your e-ticket and present at any FIRS office as an evidence of tax paid. It's that simple. For more information, visit www.firs.gov.ng or any FIRS office close to you. FIRS, it pays to pay your tax.
What has been the tax collection performance of the Federal Inland Revenue Service over the years?
When we started in 2004, I think we were in billions. We were talking about, billion collection. Now we're talking about 4.6 trillion.
2011?
2011. If I remember when we were setting out in 2011, my target was, let's cross 4 trillion. Okay, and I can see we're heading to 5. But my concern still, even with the figures that I've talked about, is that the non-oil revenues have not moved as fast as I would like them to. They've moved. We've we've achieved our 25% increase targets that we set for ourselves. But it can be a lot more, because really one of the targets that one had was a situation where, we should be aiming as a 50-50, non-oil 50 at the worst, or at the best 40% oil, 60% non-oil. But you see, with the oil prices increasing last year, it has further widened that. And then for all non-oil revenues to grow, it's really not just about the tax authority. Non-oil is driven by the tax base, by additional investment flows coming into the country, by various sectors of the economy contributing their own fair share, of revenue on which you'll be taxed. And if, for example, you look at your non-oil GDP, and about 45% of between 40 and 45% of GDP comes from agriculture, and you ask me how much of my non-oil tax is from agriculture, I'll tell you just about or less than 1%. So there's a clear mismatch, and so maybe a 50-50 target, given the structure of the economy, may have been a very ambitious target, which we have not met. But still, one needs to keep it in focus that really ultimately the purpose of this reform was about growing on all taxes and not just all taxes, so that we can have a sustainable base regardless of how oil is generated and how oil fares on the international market. And that is beyond us, but we will do our best by improving efficiencies, improving effectiveness. We're still looking at automating third-party collection of VAT, so that's one of the projects we're working on now. Last year we integrated our database to customs so that we have access to that database. Again, it's moving slowly, but at least that happened, and we'll continue to pursue that. So, coming back to your question, figures-wise, you could say that we're a 4.6 trillion agency, a 1.5 trillion non-oil, but we can do more.
When you talk about getting taxes from agriculture, what exactly
do you mean?
Because we used to think that agric was non-taxable.
You see, when I talk about agric, I'm not talking about the peasant farmer. The peasant farmer who farms for subsistence. But the truth of the matter is that we have such an agrarian base that we can translate what we have to wealth. Not so much in terms of the farm itself, but from agro-allied business. And, take VAT. Basic foods are tax exempt, but packaged foods are not. So the more you have the cassava flour, the yam flour being sold in the supermarkets, the more you use the fruits of the land, to make produce that you sell in your markets. This December, I gave somebody an assignment. I wanted to buy a few hampers for staff. And I said, you know what, I want to send a signal. I want it to be all Nigerian, to encourage my staff to buy Nigerian. It took her a long time. She will come back. She said, Madam, she'll bring goods. I said, but it's not Nigerian made. She'll go back. She said, Madam, I said, must it be Nigerian? I said, yes, I want an all Nigerian hamper. It took her nearly 3 weeks sourcing, hunting. So when she finally did, we had a good, nice, hamper. But what it taught me also was that if it is that difficult to get Nigerian-made goods for someone who wants Nigerian-made goods, people don't buy because they're looking for Nigerian-made goods. People buy because of convenience. Then it just tells you how much potential we have. And the fact that 95% of what you see in the market is not from what we ourselves produce tells me that if we get that right, the kind of tax revenues we'll make, because all those goods are taxable.
Okay, so we're talking about the spin-offs.
We're talking about the spin-offs, You know, the packaged foods, the conversion from basic to value added, you know, so many, the variants of the same item, you know, replicated in so many different ways. Yeah.
But when you go to a farm in Ota or in Ilorin and they bring out yams, you don't collect taxes on raw food?
No, we don't. Not VAT. But if, for example, you have a company that buys raw yam and sells raw yam and makes income on raw yam, we'll collect company income tax. Yep.
Okay. Still talking about impact. You are also chairman of the Joint Task Board. So from time to time, you are in contact with the state chairman. Would you say that the reforms have trickled down to the state and local government level? Because at the local government level, there's a lot of complaint about the imposition of multiple taxes, and more importantly, the strong arm tactics that they use in collecting.
I think we have less control with that. And for us, really, at the Joint Task Board, I think we're more concerned with the states, because it's the states that will now reign control over the local government. And I have seen some states, a few states though, who have taken the bull by the horn to see what they can do to provide some sanity at the local government area. But there's still a lot of work to be done, so it hasn't trickled down as much as it could. And I truly believe that, you know, with the right will, it can trickle down.
Okay. Let's move to tax policy. In 2010, the tax policy of Nigeria was put in place.
Yeah.
Actually, was approved
Yeah.
by the Federal Executive Council. You want to share with us some of the highlights of that tax policy? What direction is it taking us?
Well, I think first of all, the tax policy recognizes the federal system of government, and it recognizes the fact that we need to ensure and build in competition, even in the manner in which we tax our goods and services. But it also respects the Constitution, and that, you know, whatever powers have been devolved to federal or states at the constitutional level be respected. And basically that's a platform on which the tax policy is built. Now, going further, it advocates, because of the difficulty of, for example, the question you raised on income, assessing income, it advocates that it's easier to collect on indirect because of the lack of systems we have and the lack of interconnectivity than to collect on direct taxes. And so it advocates a shift from direct to indirect, you know, again, to grow the revenue base and, you know, to one where through means that are easier, you know, to collect. It also talks about the need to institutionalize, you know, the whole tax system for governments, be it at federal or state level, not to see tax collection as a business, but tax collection as a business, not a business, I mean like a commercial business, but as business of government. And, you know, with all the confidentialities and all the decorum that is associated with, you know, having a government, you know, professional institution. And you know, it talks, for example, because again you mentioned it when we're discussing local governments, the tax policy is clearly re-emphasizes, you know, the use to which tax consultants are used. In fact, like somebody says, not even consultants, they call them contractors. A situation where you delegate the business of government to those who use rough arm tactics is frowned upon, you know, in the tax policy, you know, which is also supported in the law, and, you know, basically pushes for collective revenue, but doing that under an environment that encourages, you know, voluntary compliance. So these are just a few of the issues in the tax policy that we have.
You spoke about recognition of the structure of governance, federal, state, and
Yes.
constitution. Does that mean that that policy is for the operators at the federal level, or is for the entire country?
It's a national tax policy, and that's why it was taken to the National Economic Council.
Such a hard-working woman, such an impactful, a success-packed tenure. Madam, we are proud of you. And once again, we bid you farewell. Wherever you go, God will go with you. In the meantime, Alhaji Kabiru Mashi, the Coordinating Director, Support Services Group at the FRS, has assumed duties as the acting chairman of the Federal Inland Revenue Service. Alhaji Kabiru Mashi was at one time in his career the chairman of the Katsina State Board of Internal Revenue. And in his more than 1.5 decades at the Federal Inland Revenue Service, he's been the Director of Finance and Admin. Presently, before his appointment as acting chairman, was presiding over the Support Services Group, which also supervises human capital, human resources, if you like, and finance and admin. Alhaji Mashi, we wish you the best of luck. Keep the flag flying. Keep the naira, the tax euro, and the tax dollars rolling in. Nigeria needs it. And to our viewers, we wish you a success-filled month of April. Thank you for watching.